How concerning are the developments today out of New York Community Bank, having, they say now, potentially to raise capital?
First of all, it's very unfortunate. I mean, we see these banks, this is a crisis of confidence, and, it does impact the small businesses, the people on the street who really have these relationships with these banks. So it is unfortunate. In terms of this spilling into more systemic problem, Chairman Powell talked about it being closely monitored by the supervisors all across the country. This is a crisis that's probably going to play out over a number of years, right? But not sure at this point if it becomes into a full-blown crisis. I think the Fed will be clearly watching very closely if it spills into and starts impacting smaller businesses to a bigger degree.
So let's pivot then to interest rates and what the Fed chair said today. Anything there, apart from the fact that it seems like what he said was what we already knew, which is there are not going to be interest rate cuts in March, probably not in May, maybe not before the second half of the year. The market seems to be just fine with that.
Tyler, it took us a long time to get out of the zero interest rate policy to finally a place where Fed has in some way really restored that Fed put. We didn't have that for years. So having that ability to have that, a more normalized interest rate environment, is actually good. I think the tricky part is, and this is where the Chairman Powell talked about this, and we'll find out more in the Beige Book as well, it's a very much uneven economic growth. On one side, we have people who are benefiting from the financial assets, how the markets are doing. On the other side, the consumer is starting to feel stretched and strained. Now, does that spill into wider crisis, a wider problem? That's what we'll have to wait and see. But yeah, we don't think there's any rush here to cut. The economy is on aggregate doing well. The interest rates are providing a big savings boon to plenty of Americans. On aggregate, the economy is in a fine shape here.
As we look at the markets, we've had a nice little rally here. The current pace of returns about 7%. Is it sustainable if we assume maybe that the Fed stays where they are, so the monetary policy doesn't change substantially? Can we sustain the run we've had in equities?
Right. Courtney, so we came off of a 26% return in 2023 last year. 7%, if you analyze it, we're looking at 50% returns. Can it happen? Of course it can. Probable? Not likely.
50% return, yeah, that's pretty high.
Not likely, especially given where valuations have started to climb up. The sentiment is starting to get quite bullish. So, the market is due for a little bit of a pause here, for a little bit of a correction, right? And maybe there's all these worries and fears about another regional crisis kind of triggers that. But, if we take a longer term view, 5 to 10 years, the trajectory for markets is still upward.
What you have specific recommendations? I know you mentioned the consumer being stretched, which I found interesting. Obviously, we've just heard from a number of retailers, Target, Walmart, some of the smaller ones, Abercrombie today actually doing fairly well, even though their shares under pressure. Putting it all together, what recommendations might you have looking forward for us?
Yeah. So when we think it's an ideal hunting ground for active strategies, because there are plenty of stocks in every sector, good balance sheets, not a lot of debt, good fundamentals, levered to some of the big trends in the society. We actually think there's a lot of money to be made behind transitioning to clean energy sources. There's money being spent by the government on the Inflation Reduction Act, the CHIPS Act. So some of the picks there, I have like an Eaton, right? Mm-hmm. It's a major supplier in the electrical infrastructure as we transition to a more clean energy sources. Their products are being used in data centers. So talk about this whole AI chip-driven boom that we're seeing. A company like Eaton's going to definitely benefit there.